The global economy is shifting its primary bottleneck commodity. For a century, economic growth was dictated by crude oil. Today, the constraint is refined lithium. Sovereign states that controlled hydrocarbon reserves dictated the geopolitical reality of the 20th century. In the forthcoming decade, leverage belongs to the nations and corporations that can successfully control the battery value chain. The IEA forecasts a 146% global lithium demand expansion by 2030. Battery allocation surges from 60 to 95%. The mining sector is ill-equipped. Morgan Stanley projects an 80,000 metric ton deficit by 2026, a prolonged structural deficit where supply requirements triple. China currently controls the vast majority of critical mineral refining. To insulate its domestic automotive and energy sectors from that concentration, India is executing a strategic pivot under its Atmanirbhar Bharat initiative to build a localized supply chain from the ground up. The government mandate requires 30% electric vehicle penetration by 2030. Right now, total penetration is hovering under 8%, visible primarily in the adoption of commercial two-wheelers and electric rickshaws. This graphic illustrates the execution gap in domestic manufacturing. To hit that 2030 mandate, the government allocated over $2 billion to establish 50 gigawatt-hours of domestic battery capacity. By early 2026, barely 1.4 gigawatt-hours had been fully commissioned. This gap between policy and production capacity represents a multi-billion-dollar market, currently searching for a domestic home. For the entities that can successfully scale, this void represents a specific opportunity to capture a primary share of the domestic battery value chain. The highest margins don't come from assembling the final vehicle. They come from the microscopic chemical engineering required to make a high-density battery function safely. Relying on imported precursors exposes companies to commodity price shocks. The solution is backward integration, owning the entire manufacturing process from the raw material extraction up to the refined chemical synthesis. This diagram breaks down the anatomy of a lithium iron phosphate cell. When it pulls apart, you can isolate the specific, technologically demanding layers where Indian chemical companies are establishing aggressive footprints. Entities like Gujarat Fluorochemicals and Himadri Specialty Chemical are investing in localizing the synthesis of the cathode active materials and the complex electrolyte salts. Look closely at the anode during a charge cycle. A protective barrier called the solid electrolyte interface, or SEI layer, forms on the graphite. The integrity of this microscopic layer dictates the battery's thermal stability and its ability to handle fast charging. Forming that stable layer requires specialized electrolyte additives. A company like Ami Organics leverages its history in pharmaceutical manufacturing to produce these additives, because even trace moisture or metallic impurities can cause the battery to fail. Announcing a gigafactory is a matter of capital, but maintaining chemical purity at a commercial scale requires deep institutional expertise. It creates a technical barrier to entry that traditional bulk chemical manufacturers struggle to overcome. Stepping out of the chemical labs and onto the factory floor, the focus shifts to India's legacy power storage duopoly, Exide Industries and Amara Raja. Global electrification threatens their multi-decade dominance in lead-acid batteries. To survive, both companies are executing capital pivots, constructing multi-gigawatt-hour lithium-ion gigafactories. New startups often rely on external funding to build capacity. These legacy titans utilize the reliable free cash flows generated from their traditional lead-acid operations to organically fund these expensive transitions. But those gigafactories require physical infrastructure to deliver power to the consumer. Exicom dominates the space, deploying the high-powered DC networks and fast chargers required to keep these larger battery packs moving nationwide. At the grid level, integrating wind and solar installations require battery energy storage systems, or BESS. These massive battery banks manage the intermittency of renewable sources and help keep the national power grid stable. Companies like Advait Energy Transitions bid on and capture the state funding designed specifically to build out utility-scale grid storage. Direct cell manufacturers often compete in low-margin pricing wars. The companies building the chargers and the grid storage operate with lower competitive intensity, acting as the indispensable infrastructure for the entire transition. This linear growth narrative assumes several factors remain constant. In reality, the domestic supply chain faces structural risks that could redirect this capital. First is the advancement of sodium-ion technology. Sodium is universally abundant and cheaper. If it scales commercially for storage and urban mobility faster than anticipated, it could cannibalize a significant portion of the demand for lithium. Extracting the raw materials presents its own hurdle. South America pulls lithium from easily accessible brine pools. India's domestic 5.9 million ton reserve is encased in hard rock in Jammu and Kashmir. Extracting it requires capital-intensive mining that threatens to contaminate critical shared watersheds in a sensitive geopolitical zone. Furthermore, Chinese producers maintain a tight grip on the global supply chain. If they deliberately flood the market with subsidized battery cells, the resulting price pressure could destroy the profit margins of emerging Indian competitors. We saw the vulnerability of the sector recently when global lithium spot prices crashed to 4-year lows, triggering inventory write-downs and erasing corporate profitability. While raw material prices and geopolitical friction create constant turbulence, the transition is supported by a global reorganization of energy capital. Success in this sector will be defined by those who can manage the technical complexity of backward integration and secure a role in India's emerging energy architecture.